Thank you for staying with India Today. I'm Suesha Sawantan. Cutting across to more breaking news coming in. BJP has hit back at Mamata Banerjee over governor face-off. In the latest, BJP has responded saying that the opposition is politicizing governor's reshuffle. BJP is saying that do not politicize governor reshuffle. BJP in the statement saying that president has the right to appoint governors. That's the latest response coming in from the BJP after what was said by the Mamata government over the resignation of CV Ananda Bose. Let's listen in.
No, already it has been mentioned by the Honorable ex-governor of the state that he has resigned due to some health issues. So we should not create any kind of controversy. It is not mandatory to discuss the name of the governor with the sitting chief minister. I would like to ask whether when R.K. Narayanan was given the charge of the governor, at that time whether it has been discussed with the Buddhadev Bhattacharya.
And yes, even as we saw the resignation by CV Ananda Bose ahead of the polls in West Bengal, Chief Minister Mamata Banerjee, who expressed concerns over this decision, where she went on to allege that it might be a result of the union government's pressure. Now, this latest response coming in from the BJP hitting back at Mamata Banerjee over governor face-off, where BJP has said that the opposition is politicizing governor's reshuffle. BJP also saying that do not politicize governor reshuffle, saying that president has the right to appoint governors. This also is they're adding that as far as CV Ananda Bose's resignation is concerned, it is on health grounds that he has decided to take this decision, and this should not be read into no political intonations that should be removed out of it, as BJP in this latest response has said that it is the president who has the right to appoint governors. And as far as CV Ananda Bose resigning from his post is concerned, this is after serving for 3.5 years. But the timing that is being questioned, because this move that comes ahead of the 2026 assembly elections that are to follow in the state. And soon after his resignation, CV Ananda Bose, who said that he had spent enough time in office, he did not want to continue. Following his resignation, the governor of Tamil Nadu, who is likely to take charge. Let me take this to my colleague Indrajit Kundu, joining us on the broadcast with regards to the latest response coming in from the BJP, where they outright deny the allegations pressed by Mamata Banerjee and say that it is at the president's discretion.
So that's right, Shweta. As far as the BJP is concerned, they are saying that this is the center's discretion, this is the president's discretion as to who is going to be appointed as the governor. But the Trinamool Congress is of the firm belief that there is precedent that all such appointments are made in consultation with the state governments, and therefore it should be that precedent should be followed. In fact, Shukendra Shekhar Rai, senior Trinamool Congress MP from Rajya Sabha, he has given a statement saying that state government must be involved in the appointment of governors with the formation of panels recommended by the Sarkaria Commission. So the Trinamool Congress is clear on its stance, and this of course comes at the backdrop of what is happening, the entire SIR drama that's unfolding in West Bengal, because that assumes significance, because the governor's role will be very, very important and crucial, because the SIR process is still underway. It has not been completed. Deadlines have been missed. On February 28th, the final list came out, even though that is not the final list. There are supplementary lists that are supposed to come out even as we speak, and we don't know when the elections would be announced, because by this time, the elections had already been announced. So there is a sense of unease in political quarters in West Bengal. A lot of people have therefore started speculating as to why sudden change in the governor in West Bengal.
All right, Indrajit, many thanks for getting us the latest. Moving on to more breaking news coming in, JDU sources have said that no decision has yet been made on the next chief minister in Bihar. A decision that is unlikely before the next month is what is being said. Chief Minister's post will only become vacant after the 10th of April is the clarity that is coming in, as the current Rajya Sabha MP from Bihar's term ends on the 9th of April. JDU chief is expected to be sworn in as Rajya Sabha member after the 10th of April. This according to sources of Nitish Kumar. will maintain his political base in Patna and will only visit Delhi during Parliament sessions. There has been no discussion yet regarding Nitish Kumar's inclusion in the Union Cabinet is what is coming in from sources within the JDU. So with regards to what it looked like, especially with Amit Shah's presence in Patna yesterday and key meetings that were happening back to back, that the decision on the next Chief Minister in Bihar will be taken soon and could be announced in as soon as 2 to 3 days seems highly unlikely, as JDU sources say that no decision has been made on this yet as far as the next Chief Minister of Bihar is concerned. And they're saying that it is unlikely that a decision will come before the next month. Chief Minister's post will only become vacant after the 10th of April is what sources within the JDU say, as the current Rajya Sabha MP from Bihar's term ends on the 9th of April. JDU chief, that is Nitish Kumar, who is expected to be sworn in as Rajya Sabha member after the 10th of April. And according to sources, Nitish Kumar will maintain his political base in Patna and will only visit Delhi during Parliament sessions. Let me take this to my colleague Rohit Singh joining us on the broadcast. Rohit, with the sort of meetings that were happening yesterday, seemed quite likely that in the next 2 to 3 days an announcement could come in to who will be the next Chief Minister. But with the delay in this decision, why so? What more are you picking up from your sources?
See, basically the delay has happening basically because of the elections that are going to take place for the Rajya Sabha in Bihar on 16th. Because remember, there are 5 seats for which elections are going to take place. But after yesterday, we saw that RJD also gave a candidate for the election. So there are now 6 candidates in play for 5 seats. So now an election is inevitable. So elections will be taking place. Voting will be taking place on 16th. And in all certainty, Nitish Kumar, Nitin Nabeen, they all will be going to the Rajya Sabha. So till 16th, it seems that until the final results come out, the delay is happening because of that. And after the Parliament session is over, what we are learning is that the change of government, the change of power will take place in Bihar, and 10th of April is the date. What we are learning is that once Nitish Kumar takes oath as the member of the Rajya Sabha, then after that only power transfer will take place. Back to you.
All right, Rohit, many thanks for getting us those details. While it did seem like a decision could be made in as soon as 2 to 3 days, certainly a delay on that front that has clearly happened. And the reason for it is being said as how Chief Minister's post will become vacant only after the 10th of April, as the current Rajya Sabha MP from Bihar's term ends on the 9th of April. With that, we now go across to Abha Vakaya of Business Today, who joins us with all the updates from the markets. Abha, over to you.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange.
Hello and welcome you with us here in Business Today. Let's take a look at the headlines from the markets, business and corporate world at this hour. Russian oil cargoes increasingly heading towards India after the US issued a temporary license allowing purchases. Bloomberg reports over 15 million barrels of crude are now floating near Indian waters, with nearly 18 tankers signaling Indian ports, offering quick supply relief amid Middle East disruptions. Amid the escalating West Asia crisis, the government has asked refiners to maximize LPG production using propane and butane streams. The Petroleum Ministry has directed supply to IOC, HPCL and BPCL and asked companies to prioritize domestic LPG consumers over petrochemical use. Markets slipped amid rising geopolitical tensions in West Asia. Sensex fell nearly 1,000 points to around 79,000. Nifty dropping about 270 points to hover around 24,500. Banking, financial services, real estate stocks leading the decline as investors turn cautious. Mukesh Ambani's mega IPO plan for Jio platforms may face delays as the government is yet to notify new listing rules cleared by the regulator. Reliance is awaiting the final nod to appoint bankers and file draft papers for what could be India's biggest ever IPO. That's according to Bloomberg. No China-style mistake with India, a big statement by the US as the two countries near a trade deal, says will not allow India to beat it on commercial aspects, stresses on reciprocity with India. Well, breaking news also coming in on your screen from Gujarat. According to a report by news agency Informis, Tata Motors Sanand plant may have to cut car production by 50% after Gujarat Gas has reduced supply to the unit. The gas used in painting operations is critical, and officials say that 2 of the 4 production lines could be impacted, affecting models like Tigger, Tiago, Nexon and Sierra. That's the breaking news coming in. Tata Motors Sanand plant may drop output by 50% as Gujarat Gas has cut supply to the unit, according to the Informis. Tata Motors paint lines have been hit by gas shortage, and the Sanand plant could shut 2 out of 4 production lines. This is a direct impact of the war in Iran on Tata car production. All right, joining us this afternoon, Mr. Chokalingam with us. Mr. Chokalingam, markets right now are nose diving. We've seen one of the worst week for banking and financials in particular. I want to get your perspective first. You know, in the morning we thought perhaps markets were stabilizing at these levels, but the cuts are deep.
Yeah. So, the problem is, the rising oil prices. But I still believe it is too early to panic. Yes, it's a painful. We already faced the pain. But whether one has to panic and sell out the stock, I would still wait for that. Only if oil crashes, Brent oil crashes $100, moves close to 120, then it will be like a crisis situation for Indian economy market. I believe there are 2 possibilities. Within a month or so, there can be a compromise solution because all the participants of this war, direct and indirect, are likely to be affected. And, the US allies in the UAE, Qatar and other places, I don't think they can afford a very large scale, war and death of their citizens, considering the economic status of those countries. Similarly, Iran itself would be in a difficult condition because its export of oil accounts for 83% of the total export earning, and 90% of the oil flows through Strait of Hormuz. So I would still suggest, wait on the sideline for a few more weeks before we press the panic button.
Okay, so wait before getting too panicked about it. That's the view from Mr. Chokalingam. Mr. Chokalingam, however, strategy-wise, would you sit out at the moment? Like, look at what's happening in the banking and financial space. What would be your strategy at the moment?
I would not sell off in banking because that is the one industry which is giving a lot of confidence. Whether you take a business growth, credit growth, it has again come back to 13-14%. Which went down to near 10%, even below 10%. The quality of assets are at a record level. In fact, the transmission of rate cut is also happening, both in terms of deposit rates and in terms of the lending rates. Even this morning, there are very interesting insights about, the lending above 9%. That segment share is going down substantially. Similar thing happened in transmission of low interest rate on deposit as well. So I would hold on to particularly the public sector banks. I would rather suggest buying. My risk to my view is only if oil, as I mentioned earlier, goes to $120 per barrel. But as long as oil is below, $90, $100, I would continue to buy, quality PSU banking stocks.
All right. India may be getting some relief on crude oil supplies after US government has issued a temporary waiver allowing purchases of Russian oil for 30 days. According to reports, several tankers carrying Russian crude have already begun sailing towards Indian ports with over 15 million barrels of oil. And these were currently headed towards East Asia, but were also impacted by US sanctions. However, a new challenge is emerging on the LPG front with the blockade of the Strait of Hormuz disrupting tanker traffic. The government has asked refiners to maximize LPG production and prioritize supplies to state-run fuel retailers to ensure adequate availability for households. Nearly 90% of India's LPG imports are from the Gulf, and unlike crude oil, India does not have viable alternatives for LPG. For more on this, let's go across to Aishwarya Patil. Aishwarya, take us through, with Russian oil tankers now heading to India, how much relief will this offer for crude supplies?
Well, that was the concern as to what exactly is our crude supply and energy security. And the Union Minister for Oil, Hardeep Singh Puri, did mention that we have 50 days of supply so far. As far as this particular report is concerned, agencies like Kepler have been tracking that continuously, and in fact it says that about 18 vessels carrying Russian Urals are now indicating that they will be heading towards India this week. All in all, they will be carrying about 15 million barrels of Russian oil. So the oil is floating in the areas of the Arabian Sea and the Bay of Bengal, and it is at our disposal if we do need it, is what this indicates at this point. And apart from that, yesterday as well, we saw that 3 of the vessels were headed towards the Indian shores as well. So this seems like good news for India as far as our energy security is concerned, for petroleum and diesel, etc., and for the civic use as well. So all in all, refiners may be a little less worried now that we have these many options available to us.
Okay, and with LPG supplies, at risk, what steps is the government taking, and how could this impact the common man as well? Because we might see, an impact on supplies, on prices.
Right. So on the LPG side, also LPG and both LNG, the government had said that we are at a comfortable position and we will be looking at diversified suppliers across the globe. But as of now, what the government has told refiners, it has in fact passed an order to maximize their LPG production, and oil marketing companies like Indian Oil Corporation, BPCL, HPCL have been asked to prioritize this supply for domestic usage first and foremost, and this should be marked solely to the consumers like you and I. So as far as the concern of your cooking gas is concerned, that has been put to rest as far as the government's policy on this is concerned. An order has been passed, and that should also be resolved apart from the 50-day of supply that we already have of overall crude, petroleum and gas as well. So that's the update so far as the West Asia war is still ongoing and a lot of concerns are still looming.
All right, Aishwarya, thanks for joining us with that. Shailendra Bhatnagar also with us. Shail, good afternoon. Not looking pretty right now, Shail. 244 on the index, 24,439 to be precise. What's it looking like on the charts? What are the technical indicators telling us? What's the support level we're looking for?
Well, Abha, as you very rightly said, it's not looking pretty at all. 700, 750 points down on the Nifty for this week, and about 2,400 points down on the Bank Nifty, down about 4.5% this week. Crude is now at 83.36. This is the highest we are seeing since July 2025. So it's pain all around, except for a very few pockets, which is defense. Look at BEL, BDL, the 3 shipbuilders. They are doing very, very well because of this crisis in West Asia. Whether it's sentimental or actual, only time will tell. Some parts of the manufacturing space are doing pretty well. Look at ABB, look at Power India, look at those spaces. Some parts of metals is doing pretty well. But it's really, really bad, Abha, when you look at the broader markets.
It is
energy, defense, and some part of metals in good shape, but rest of the market is really bleeding.
But, let's talk about that a little bit, because the investors are, pretty much suffering right now, and they don't really know what to do at a time like this. They're watching, their wealth just completely being eroded as we speak. So in terms of, really just how they should hang in there, should they be just holding their horses right now, Shail? How likely are they to recover their money in what kind of time? I know we don't have the answers, but these are the questions that retail investors are asking right now.
Absolutely. So let me just take it in 2 or 3 formats. So if you're a mutual fund investor, please continue with your SIPs. Don't stop them in flexi caps, in mid caps and small caps and multi cap funds, and just wait for this pain to get over. It will. The government of India, as you very rightly pointed out in the last 5 minutes, taken steps to ameliorate the crude oil supply and the LPG thing. So no prices are rising in India. That can be very well said. Please continue with your SIPs. Now, if you're a new person, you're very lucky. You're going to buy a market at a discount. So go with a multi-cap fund and buy that in piecemeal. Don't make a lump sum investment, but look at it for the next 2 or 3 weeks. Buy a good multi-cap fund. If you really want to play the markets sensibly, then possibly pharma, banks on the PSU side, and of course the manufacturing space, including counters like Blue Star and Voltas, they should do well because of the incoming summer. Again, please speak to your financial advisor, your technical advisor before following this. But watch television for the cricket match, not for the action in West Asia. Be happy, and this too shall pass, Abha.
All right. Let me bring Mr. Shokalingam in as well. Let us keep you up to speed. So yes, please do tune in so that we can give you all the latest information. Mr. Shokalingam, is it the right time to switch to some of those stocks that, as Shail said, could perhaps see a boost during the summer months in terms of whether it's, Consumer, Dixon, Blue Star, ACs, etc. Some amount of the quality ice cream, for instance. Is it the right time perhaps to buy at some of these lower levels, or is there just too much pain all around?
No, tactically, yes, for short-term opportunities, because historically, when summer comes, these kind of stocks rally 5-10%. Exactly. And tactically one can. Otherwise, also one can focus on, stocks like agri-theme, hospital sector, PSU banks, and also defense. These are the 4 areas where our dependence on external market is negligible, and basically all these themes are based on the domestic demand driven. Why I am still not panicking and I keep advocating measured buying is that in the last 30 years we have seen so many conflicts, and markets have successfully lived through all those conflicts. Now the latest conflict is in Ukraine. Now this is the 5th year we are seeing the war. Still market across the world is seen the record highs also. Like Shail said, I also believe this also will pass by. Perhaps for risk-taking investors, this could be a great opportunity to invest in a phased manner over next few weeks.
All right. PSU banks just remaining on everyone's radar there, even with the knock. Mr. Shokalingam, where else in the markets do you feel perhaps investors are using the opportunity to profit book, where the market is perhaps realigning valuations? Look at the way real estate is crumbling today, for instance. Where do you feel perhaps we've seen some amount of realignment taking place and valuations are now looking attractive?
Yeah. So profit booking is there for long-term investors, but those who invested fresh money after September 24, I mean, 8 out of 10 stocks are not in profit. They are in deep red, because we saw the record high level in September 24. That was a time overall market cap hit 485 lakh crore. As we are discussing now, the market has lost about 50 lakh crore from that level, adjusted for recent IPOs. So 8 out of 10 stocks are in red. So basically what we have been advocating, what we hear from the investor is that tilting towards Nifty Sensex stocks to the extent of 50% of the portfolio, because DIs would continue to support the Nifty Sensex stocks, and they also have become more dominant than the FIIs in terms of share of the equity stake in the Indian market. And second, as I mentioned, a lot of investors are moving towards a domestic demand driven, and be cautious on the technology stocks, not because of the war, but it looks like AI, it might pull down the growth. Already technology stocks were growing in over 2 to 4% single digit in terms of dollar revenue, but now it looks like even that 2 to 4% growth will be washed away because of AI threat. So that is where the caution is applied, and people realign. So these are the 3-4 strategies we also advocate, and we also hear from the investors that this is what they also like. And lastly, the PSU banks, as I said, most banks have been trading at around 1.1 time or 1 time price to adjusted book value. So once the war ends, I think some of the quality PSU banks will rally, because they are sitting on a record high level of quality of assets, and the net NP, this business growth also continue to be in strong double digit.
Okay. Now, the Indian stock markets have already accounted for risks emanating from Iran. That's according to Ramdev Agarwal, speaking on the sidelines of the Business Today golf finale in Mumbai. He also has this advice for retail investors in these rough times. Listen in.
Unless something horribly goes wrong, it is very tough to push the market again lower than whatever it traded in. It looks very bad that a fight is on, but markets are moving up. But markets are very selfless, very emotionless, and it's only about economic engine.
So have they moved on from Iran already?
I mean, for whatever we know, it has.
What about, sir, the retail investor strategy at this point in time? Since you're saying markets have just completely traded on this war at this point in time, what should they do?
So, Sakshi, forget about retail investor. Investor's job is to stand by its own convictions in good time as well as bad time. Good time, everybody stands by. But bad time, these are challenging times when you have to bring patience to work and don't bother too much about. And luckily, Indian economy is not directly hit. Indirectly through the fuel for petrol and little inflation. Yes, but it's temporary, maybe a month or so. But on the whole, Indian economy is in a fine shape, fantastic shape. You just saw Q3 numbers, 7.8%, and it's surging, it's picking up steam. So I would think that we are in good shape. Broadly, not that much impacted. Yes, there will be some marginal impact. So I would think that this is a time to bring patience, and see, corrected market is the best time to start investing. It's a boon to the investor rather than, kind of a challenge.
Okay, it's lots of concerns for retail investors. Shell, coming back to markets and, what else we're tracking today. Any other, particular stocks or themes that you want to highlight as we head towards closing?
Yes, Abha, I'd like to point out the winners this week as far as the Nifty is concerned. Of course, the energy space is doing very, very well. But look at how the market is understanding this crisis, and no better flow than the money flow to track that. So BEL is the biggest winner on the Nifty, up 5% in the past week. Look at metals, Hindalco, 3.5% higher in the past 5 sessions. Look at how the market is getting defensive. Sun Pharma, India's biggest drugs maker, is up 3.5%. Coal India, Dr. Reddy's, and of course IT. Infosys is amongst the gainers, and the entire cacophony of refinery stocks, MRPL, Chennai Petro, Reliance in particular. So this is how the market is understanding this war. And in terms of record highs, you have Power India, earlier called Hitachi Energy, and of course GETND. So these are the 2 stocks that have hit record highs today, but that's the money flow and money speaks.
Okay. All right. Now, a big statement coming in by the US as it nears a trade deal with India. Speaking at the Raisina Dialogues in Delhi, the US Undersecretary of State Christopher Landau said that Washington will not repeat the mistake it made with China 20 years ago, allowing it to beat the US in a lot of commercial things. He said the trade deal with India is almost ready, but the partnership must be based on reciprocity and fairness.
We are very excited about the trade deal that is almost at the finish line now, and think that can be the basis for really unlocking almost limitless potential. And so we are very much excited on focusing with India on these economic and commercial opportunities. And so, but again, India should understand that we're not going to make the same mistakes with India that we made with China 20 years ago in terms of saying, oh, we're gonna let you, be able to develop all these markets, and then the next thing we know, you're beating us in a lot of commercial things. We're going to make sure that whatever we do, it's fair to our people, because ultimately we have to be accountable to our own people, just as the government of India has to be accountable to its people.
All right, just a few minutes to go before we close for the day. I just want to take you through some of the cuts. But before that, some breaking news coming in on your screen. Qatar Energy Minister telling Financial Times that a Middle East war could push oil to $150, choking Gulf energy supplies. I understand why this is significant. We were around 65, going up towards 80, and he's quoting 150, saying that this would force exporters to halt shipments. This is a big news coming in right now, with the Qatar Energy Minister speaking to the Financial Times, saying that a Middle East war could push oil to $150, choking Gulf energy supplies and forcing exporters to halt shipments. That's the latest coming in. This is from the Qatar Energy Minister himself, speaking on the Middle East war and the current concerns around oil supplies, saying that there are key risks and that Gulf exporters could halt oil shipments going ahead. Mr. Chokalingam, this is pretty serious. This is the first such statement that we've received post the war breaking out. We earlier had reassurances from OPEC and from other countries kind of managing the situation, but this is the first major comment coming in that alludes to quite a steep hike in price as well as major disruptions to supply.
If oil is to go to $150, then we are very sure we all will be jobless for next 6 months to 12 months. Yes. The impact on economy markets will be deadly. So let us accept that. It's very difficult because last time it went to $140, we saw what kind of growth correction happened post-Lehman, before Lehman crisis. So, but I doubt, even post, Ukraine war, it maximum went to $120. Now the renewable space has taken off. Russia also aggressive. And if oil has to go to $150, then the war has to become very deadly for another 2-3 months or so, or more than that. And then the entire world economy will be impacted very badly, including Iran. So the pressure will build up across all the regimes to, find a compromise solution. Therefore, I am putting it on record that beyond $110, it is most unlikely in the next 3 to 5 years the oil price to go up.
All right. It's very close to closing, just about a minute or two to go. So markets would not have had a chance to fully digest this information. But that's the big breaking news coming in, and we'll have to wait and see how post the weekend and, how the war progresses, what we see on the Hormuz Straits, really what the impact is on Monday morning with regards to that comment coming in and the further disruptions when it comes to oil, when it comes to LNG and so forth. Right now, markets have had a pretty steep cut for the day, while we have had a few gainers and BEL again from the defense pack, but on the downside, and L&T Foods is down 10%, Tejas Networks down 5%, Mastec down 5%, Godrej Property is down 4-5% today, Ashok Leyland was down 4%, Mahanagar Gas, HPCL, ICICI Bank 3.5% cut there. So banking and financials, in fact, across the board cuts coming in. GMR Airport was down 3%, Fortis Health, Prestige Estates, real estate as a theme was lower today as well. Lodha Developers again 3% there. So that entire pack, lots of banking and financial names Imami, Ambuja Cements, BKG Foods, you name it really, and we saw cuts of about 3%. Interglobe also down about 3% on the back of that downgrade coming in and continued pressure on aviation currently with what's happening globally. SBI was down 2.5%, 3%. Axis Bank, Godrej Agrovet, for instance, MCure Pharma, it really didn't spare anyone. So that's really how the closing has shaped up in terms of cuts across the board. Nifty Bank has had one of its worst weeks ever. And the Nifty itself also seeing a huge cut in trade today. So, some amount of commentary coming in that the markets had possibly priced in what was happening in the Middle East or West Asia. But today clearly was a day when the markets continue to buckle under pressure, and we're expecting to see further such sentiment or at least volatility over the next few weeks or so to speak. Shell, how would you sum up the week gone by?
It was terrible. I'm hoping that sense will prevail. And just as the war had started on the weekend, it will pause over the weekend. But the Qatari minister's statement has worried everybody. And that's the reason why you see this very sharp fall that's happening. Let's hope sane sense will prevail. But for those who don't trade intraday and who are not looking at market from the point of view of daily pulse, please just relax. Keep your sips in place, and this too shall pass. We've seen many wars, we've seen much more pain, and this will go away. Market is at a discount. Please try to buy sensibly.
Or then just simply hang in there. This is not the time to sell. It's so even if you need liquidity, it's really just not the right time to sell. Just hang in there. Yes, Shell, go ahead. Are you saying something? Yeah.
So, yes, tomorrow is Women's Day. So please celebrate it with the lady of the house and enjoy Sunday. Forget these worries. And we'll be back on Monday morning to tell you the good news or the bad news.
Yep, it's going to keep everyone having I know the cricket's on, but everyone's going to continue to have a bit of a sleepless weekend with that Qatar commentary coming in. The Qatari minister commenting just before market closing, saying that oil's going to hit $150. I think Mr. Chokalingam said we're just all going to be jobless if that happens. And I mean, I know we're laughing out of sheer surprise, but it's no laughing matter if we do see that kind of move on oil. We know what it means for India's fiscal deficit. We know what it means for us as importers and for the kind of pressure it'll put both on the economy and the markets. A few queries coming in before we close for the day. Amit Singh of Jaipur saying, is this a time to invest in oil and gas stocks? And Mr. Chokalingam, I think we touched upon it, but would you suggest buying into either the refiners or the OMCs?
Oil stocks, yes, for the traders and short-term investors. As long as the war continues, the oil producers, would be benefited. But the moment any compromise is found, then overnight oil price will crash. So it is good strategy for short-term investors who can take some amount of risk.
All right. Cool. Also, Sanjay Naidu from Hyderabad saying, is it a good time to invest in liquor stocks? He's a long-term investor and clearly gearing up for the weekend. Would it be a good buy?
I don't think so, because this recent substantial hike in the GST on taxes on cigarette, it is likely to happen to liquor also, because across all India, if you see, many state governments started spending lavishly on welfare schemes. So ultimately, the liquor and cigarette are the two sources which would, finance these welfare schemes directly or indirectly. So at current levels, I will not be overly bullish on, liquor stocks.
All right, great. Mr. Chokalingam, Shell, thank you so much and have a great weekend. Thank you for being with us on the show. That's where we leave it today. A dismal week for the markets, a dismal week for really the world, watching what's going on in Iran. Let's hope for some progress over the weekend, although it looks unlikely. And clearly volatility is here to stay for a few weeks. So hang in there. Thanks so much.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.